All right. No signals on our sectors. What's up, everybody? I'm doing I'm gonna do so there's a live stream for the private crypto momentum system. And I think I'm gonna share this one out with everybody. So just to see what we're seeing, because it is an important point in time and an important place in the market. And I think a lot of folks could benefit from this one. So I'm just going to start from the top, work my way down. If there are any questions, you can drop them in the chat there. Otherwise, we'll just cruise. So first thing I want to look at is, let's just, believe it or not, crypto responds very, very well to everything else. In essence, you got to think about crypto is more advanced as a market, as an asset class now. There's actually like macro traders, there's big investors who are involved in this. Obviously, the ETFs is a good representation of that. And Bitcoin itself reacts very, very well to macroeconomic conditions, as does the S&P, as do rates and all that sort of stuff. When equities are running, what do you think that's going to do to crypto? Crypto is like trading equities with, like a 1% day, 2-3 daily percent change in equities. You get, 5-10% daily change in crypto. Everything that happens to crypto is magnified. So it's as if you're using leverage in regular markets without the leverage. Kind of cool. So you can buy $1,000 worth of a crypto or $1,000 worth of stock. The stock moves 1%, you make $100. Stock moves 10%, you make you make $10 on a 1% move. You make $100 on that 10% crypto move. So the other thing that happens is equity markets lead. So the conditions that allow crypto to really start to move is going to be present in the equity markets, usually first. So we can see that the S&P equity markets basically bottomed around the same time that we got our buy signal there in crypto that last week of October. It took off. This is like a 3-week chart of Bitcoin. So somewhere in here, it was a little trailing, but eventually it caught up. And Bitcoin barely made it to all-time highs. Back to here. So it took off. Boom. S&P hit all-time highs again today. Nothing's going to piss everybody off more than hitting new all-time highs, because everybody was so bared up going into this. Everybody was so nervous about the market topping. I'm not just talking about crypto, and I'm not just talking about the equities. It's vice versa. All the crypto people were so worried that they were about to get rugged like in 2021, because a lot of crypto participants right now, especially the big accounts, haven't traded those older markets. They don't know. They haven't traded other markets. They don't have experience that what happened last time does not mean what's going to happen next. That's called recency bias. And you can get yourself hurt if you play that game. What we had here was the entire world was bared up. Some very big Twitter names, people who worked at big Bridgewater type hedge funds, who, like, that's their whole credibility, is that they worked at these big fancy shops. And so they know everything about what's happening in the markets, and they can go out and just, say what they think is going to happen and it's going to happen. Guess what? They're going to be wrong just as much as everybody else. Just because they worked at Bridgewater or JP Morgan or any of these spots doesn't mean that they have any edge on the market more than you. They may have more investors, and so they may have to have more risk. Some of them, and especially, some of the people who are most bearish, saying that was the top in the market and we won't see another high for the rest of this decade. They're in a position that they've already locked in 65% returns on the year, whether they make money on anywhere else from here or not, but they're the ones taking the biggest. I mean, if it plays out, I should say, if the year plays out, even without the downside move that they're calling for, the irrelevant thing that they're calling for is whether it happens or not, it doesn't matter to them because they're already positioned and they're already making the money that they need to be making. It's just building a Twitter account following that the people, a lot of retail people think is really important. And I imagine LPs and their fund find what he's saying really useful, and the returns that those guys have in the format that they do it, excellent. Because the reality is they're not actually trading. They're not planning on shorting the S&P 500 and never seeing a new high. I mean, they say it gets, it gets traffic, it gets comments, it gets people to do it. But if they're wrong, they're like, well, it doesn't really matter because I'm hedged or blah, blah. Like they're just saying things, right? They're not actually trading that. Their investors are not paying them to be wrong on S&P investment. Okay. So this move up, everybody was believing that this liquidity stuff that the Fed headline stuff was that they were kind of tightening and all that sort of stuff. Reality is the Fed is easing and they're just not doing it in an extremely obvious way. And a lot of people don't get it. And everybody's sucked into this inverted yield curve narrative that every time we have a yield curve, inversion, the markets go down or whatever like that. And like, you got to understand, we're playing a different market game right now. We're playing a liquidity market game. We're playing the Fed. If something goes down, they are going to make financial conditions on the market, in ways that are very creative. They're going to make it very good for assets. So not being invested in the market is a punishment. The largest underweighting in the S&P 500 since 2006, since before the global financial crisis, just happened. We were at all-time highs when that happened. And then one of my favorite indicators, the 10-week moving average of the advanced decline or the advancing issues on the New York Stock Exchange goes down to our support buy level area. Okay, right in here. So you have the largest underweight in history. So everybody's right? So everybody's short right here, or everybody's in cash right here. The most they've not been in the S&P in almost 20 years. And you think, because is the market going to reward the most? What does that mean? That means there's nobody left to sell right here. Everybody's sold. So the only place that it can go is turn around and go higher because everybody's underpositioned. And now they need to chase. That was the dip that everybody was talking about. They wanted all through over here. You got it. They didn't do it. They in fact sold the dip. Off and running, send it mode. So that's equities. Let's take a look at our longer term on Bitcoin. Bitcoin has not put in that new all-time high yet. S&P, new all-time high over here, came back, go. Bitcoin, new all-time high over here, came back, has not taken off to its new all-time high yet. We are trailing equities. The blueprint is in front of you. Equities are going to go. We have this meme stock situation that's going on. So of course, when meme stock things get like crazy, a lot of those folks are going to go back into their accounts that they opened years ago during meme stock land and be like, oh yeah, maybe I will get into this crypto thing. So watch Bitcoin Cash, watch Matic, watch Litecoin, watch the names you can see in Robinhood or those other accounts, like the old cryptos. Watch and see how they start moving. Link today took off. So Link was a big one back in 2021, took off hard today. So playing catch up because it hasn't done anything after its like December run. So as we kind of look at this, we got our all-time high run here back in March, and it's just been cooling off since. All-time highs, consolidating at all-time highs when an equity market is starting to take off, so another risk market is starting to take off, that money is going to flow. There's going to be, when equity markets are moving, everybody's like, oh man, I missed the move. I need to get in. What else is moving? What hasn't moved yet? What's going to move and what hasn't moved yet? Crypto. Everybody's going to realize that crypto is like, oh, I missed Nvidia, I missed AMD, I missed S&P, I missed NASDAQ, I missed Apple, I missed all these other things. I need to get into crypto. And so it's gonna come. And let's take a look. On the 18th, I reported in our newsletter, I reported that the equity markets had bottomed. And so let's just, have a look at my favorite equity market. So here we go. 18th, I reported it bottomed. On the 26th, 26, somewhere in here, I said, this is how I'm playing it, and sending it to new all-time highs. And I'm loaded on equities. Okay. Nailed it. Okay. So this leads. So again, on the 18th, we had a bit of a bottom, came down, took some people out. Here, I love to see this. This is the price action I just love to see because lower lows got taken out and swiped and instantly ripped right back in. Okay. I sent an email out to the group that crypto had bottomed on the 30th of April. Okay. 18th of April for NASDAQ and equities. 26th of April, I said, this is how I'm trading it. Those emails went out. Those are free. You subscribe to the newsletter, you read those. On the 30th, I said crypto had bottomed. And that was when we were getting ready to go. What did it do? It goes from 56,000 to 66,000. Okay. This weekend, this right here, I said, if we go above this, that's a buy. So that would have been 61. We went 61,450. Get above there, that's your buy. If it goes below it, then whatever, it's a short, and I'm not shorting in this market. But the smallest range after a reversal at a key support level, curvy pattern, buy it. What happened? Yeah, 1-2 days later, and then we get yesterday. A big macroeconomic catalyst. Crypto, especially Bitcoin, is playing macro. Okay. So it's no longer just, yes, there will be a period of time where it's cool that you're focusing. You have to shift between these periods of, oh, that's an interesting product release, and the market is ripping on actual fundamental reasons that liquidity has taken over for the market. And there's going to be capital everywhere. And oh crap, if I have too much capital, that means I'm going to be devalued. My currency is going to be devalued, and I need to move it into something that can at least store its value. So you're going to get allocation initially to, first thing that's going to happen is people are going to have to get into equity indices to reposition. Then they lever their portfolio, and then they can start getting into things like crypto. So now that we have these all-time high, now that reality is kicking everybody's ass in the equity markets, they're repositioning. It may take a little bit of time, but what you're going to get is you're going to get big positioning in S&P and NASDAQ. And then they're going to borrow against, they're going to get a little leg room, breathing room. They're going to borrow that against that account and put it into crypto. That's generally the breakout. Okay. I did a quick look at the sectors. There's nothing to look at right now on sectors. So I will just bypass that. That's irrelevant. We haven't got a sector signal yet. So let's take a look generally at the market names and kind of who's leading. Since, let's see, Wednesday was CPI. So let's see, since yesterday's CPI print, here it is. Okay, who's winning the most right now? FTM, Phantom. Okay, I like it. Ondo, I own it. That's a real world asset. Okay, CFX. Theta. Okay. I already did this one. Ondo. Yeah. AI. So AI names, real world asset names. Let me see if I can bring this one over here. So there's a little bit more. Wednesday, let's see what happened from a little bit more narrow. So you can see Solana is a big winner relative to everybody else. AI is next. It looks like infrastructure and layer ones. Bitcoin's not far behind. Ethereum's trailing the worst. And then memes, believe it or not, finally, memes are the lowest. This is since the CPI print. Okay, just generally speaking, that's what we're looking at right now. Okay, so we get into this is a daily, we trade off of a different one, but the daily signal fired off, which is nice. Let's take a look at you can see how that trades over a time, nice 66% win rate with 11.9. The Sharp ratio, 16 times 12. Has a 1.92 Sharp with a 2.7 Sortino ratio. Huge, huge, huge. Awesome system. Let's see, net profit of 459% with a 6% drawdown. Like, this thing is as badassery as you can get. The signal fired today. So we just updated today's candle. And you can see the last time that signal fired was at the January, and it went through a lot of that weakness, the January pre-launch of the ETF. Kind of like, oh man, this really, really sucks, whatever. Remember, we got long right over here. We got long at 38, I think. That signal ran all the way up to 69. So almost 100% move, even from so 45 to 69, somewhere around 70. Almost, like well over a 50% move from that level. So last thing I wanted to, since there's no trades to look at right now, you can look at who's leading out of the gate, who's the strongest. Real world assets, AI remain to be the strongest sectors. That's where we're going to focus. And I have one thing to show you. This is Amazon. This is what Amazon looked like in the 1990s. Okay, that's 3 month. I think that'll do. Price adjusted for splits. So I want to show you an analog to what this is what 2021 looked like. Big rip to highs. Okay. Big rip in the crypto market. Put your mind around what happened in 2021 in crypto. Okay. Crypto starts taking off in like October. Bitcoin's leading the party, as it always does first. Bitcoin leads the party, and then the party stops. Is it over? Is that the pullback? I don't know. This sucks, whatever it is. Nope. It was just that was just the first half. We have a whole another leg to go. Bitcoin 150, 200, 300,000 is on the cards. It's written. It's programmed in the code. We're off and running. And then the peak happens, 69,000, and it goes all the way down to 15,000. Bitcoin does. You have a little bit. It's that same pattern. You had that big high in, I was like in the fall or the spring. Summer went down, rallied into the fall, heading into end of the year, and then it just lost it all. It goes from 69,000 to 15,000, like huge dump. Everybody's dead. Nobody likes it. And then you get into October of 2023, This is what kicked off the crypto bull market of 2023, 2024, where we're at right now. Okay. The signal happened. This is the same setup we got. Same setup as this one, right here. Okay. Remember, 2021 high, big move, pulls back, new high. Yay, we're off and running. 15,000. This is what I'm talking about. Okay. In your mind, just remember this pattern there. Okay. Up, down, up, and then dies. Recovers. Now we get our buy signal. Okay. Buy signal happens. Actually, this is what am I doing? This is the buy signal here. Basically, it's a breakout, pullback, and then rip. That's the general forecast formula of the system. And it just starts going. And that's what happened. What happened right here? What happened right here? In here, we break out, we get to the all-time highs, and we pull back. Get up near there, boom, all-time highs, and we pull back. So we are here right now. This Amazon analog, and the reason I'm using Amazon is because it was a .com thing from a bull market a long time ago. This pattern happens all the time. Don't believe me. This pattern, I could pull up anything that any bull market from the initial bull market to another bull market to another bull market, and you'll see that one of 2 or 3 different types of patterns plays out. Okay. This part is the most predictable. Okay. Believe it or not, the big go from like 9 cents to $5.70. This part right here is the most predictable to what's going to happen. This other part's a lot harder. And so that's why you wait until you get pulled into that magic. And then this happens. So let's show the analog. You've gone up to the new all-time highs. You've done your pullback, gone to your all-time highs, done your pullback. And now you start moving to take out that high and all-time highs. This is where Bitcoin, this is where crypto generally is going right now. Where are we? We are right in, we're right in here. Now we could also, maybe even consider this to be the thing. So it did actually put in a new all-time high. Actually, this makes more sense here. So this might have been more like the ETF launch. So all-time high, breakout, pullback. This actually makes the most sense. Sorry for the flip-floppery here. It's a 3-month chart. In my mind, I'm working with like 1-month charts or, whatever. So it's a little, but the pattern's there. So we got our all-time high and we got our pullback. Let's go to Bitcoin. All-time high, we got our pullback after the initial breakout run. So breakout, pullback, run, new all-time high, pullback. We are here below all-time highs. We are here right now. Okay. It has not gone above the all-time high yet. Has not done it. We are, or maybe it did, but let's take a look. Maybe it did a little bit of, well, I guess it kind of might have done a second. Okay, cool. Close enough. This is not, we don't want to be focused on precision so much here. We want to look at the bigger picture. How does this play out? Like, yes, you're going to have up, down, and you can't look at 3 months. You got to remember that Amazon only trades 6 hours a day. It doesn't trade 24/7 like Bitcoin. So the times are a little off. Okay. Then Bitcoin or Amazon goes and starts moving. And from the all-time highs, it triples, has a pullback, has from the all-time highs, 6x. And just look at that. And then, of course, we had the 2022 bear market come in. So this consolidation at the high, same thing here. You see this all-time high consolidation, boom, it takes off. Okay. What we can see is it got bought and came back into the range. This one, a little sideways toppy, and then we had macroeconomic conditions that guided it lower. That's in essence what happened. Is the macroeconomic conditions gave Amazon and everybody, put it in a bear market. And here we are again at the new all-time highs on Amazon. It works exactly the same in the Bitcoins. Here we are at these all-time high levels, right? Boom, 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 back in, down to support. And now we have macroeconomic conditions as a tailwind to help push us higher. The Amazon analog from 2000, the highs of 1999 until the breakout in 2010, that's what you want to look at. That's where we want to be seeing what's happening. We are right here. We are Amazon in January to March, April of 2010. This is exactly where we are. Okay. S&P is making new all-time highs. The market is going to rip in all markets that, risk. So Apple, Amazon, Google, Facebook, or Meta, Nvidia, Coinbase, like I'm in all of those. And I'm also in, like, I'm loaded. Here's something. Let me just leave you with this. Not that. Okay. If you had a pile of cash you were sitting on, do you think it would matter if you got in at $3, $4, $5, $7? Do you think that matters when it goes to 190? The couple of dollars doesn't, yeah, it's nice to have it, but wouldn't you rather have the ability to be like, I'm pretty certain we're ripping here. I'm pretty certain this is going. And that's how we do it in the momentum system. We let the systems bring us in. We have really good insight right now that the S&P 500, the equity markets are leading. We really good insight that macro environment is ripe. We have really good insight that everybody was scared out of their drawers at all-time highs. Scared at all-time highs. You don't get scared at all-time highs unless it's been, like a 2-year run of just massive printing. This is, it's almost a 2-year run, but like it's definitely not a, the conditions are very ripe. There's AI, which money's flowing everywhere. Earnings are doing pretty good. The economy is looking strong. CPI is coming. Like all these things are tailwinds for a bull market. Don't get your head caught up in what happened in 2021 to 2022 bear market and you lost it all because you bought FTX all-time highs or whatever. Don't do that. We're going to send. We're going to move. It starts in the next few days. I love you guys. Catch y'all mañana.